Given the budget that was released recently, how do you see your company benefiting from it in terms of order book?
Thank you for having me on your show. You're absolutely right. The budget that just came out was a very infra-focused budget, and it was expected because the government had been speaking about infrastructure for the last couple of years. They had launched this program called the National Infrastructure Pipeline, which envisages about $1.4 trillion of government spending in the next 5 years, government and private sector spending. Now, we are very, very positive about this, and the budget obviously outlines, how that will sort of shape up. So for the next few years, we feel that, for the company, we should be looking at an increasing order book. And in terms of sort of revenue also, we should be looking at about a 15-20% growth YOY. So, which will lead us to double ourselves in the next 4 to 5 years. So that's how basically I see this huge push on infra from the government helping out us and companies like us.
It is a broad infrastructure push for the government, but for your company, you focus traditionally on roads. Will that change to capitalize, to maximize the potential from the budget?
You're absolutely right. We've been a traditionally road-focused company. 4 years ago, almost 90% of our business came from the road sector. But as of now, it's come down to about 45%. So while roads has been a big mainstay of our business, going forward, I envisage that as a proportion of our order book, it will only continue reducing because we've also expanded into so many other sectors. We've gone into railways, into irrigation, into airports, into metros, into mining. So a lot of different sectors that the company specializes, bridges, tunnels. So we're expecting these areas to also increase. While the road order book will continue to remain robust, we are also expecting these areas to supplement our future growth.
Still on roads, Rohan, you've been looking at selling about 7 road assets to a global investor. Give us a sense of where talks are, when they'll be completed.
You're absolutely right. We're looking to sell, 7 road assets. This has been a strategy of the company for the last few years that we build assets and we monetize those assets and churn our equity. So this is just another example of it. We've already done this twice in the past. This will be the 3rd time that we'll be doing it. Now, specifically about the deal, we've already signed the term sheet and the due diligence has been done. We are, doing work on signing the SPAs, and I envisage that to happen in the very near future. And this will be something that the company will continue doing even in future, that we want to keep churning our equity because we see ourselves primarily as an EPC company. And whenever we do these long tenure PPP projects, we only do it for the EPC bit, and we want to get out of it so that, a yield fund, can earn their long-term earnings out of the toll or the annuity revenue while we make our EPC margins, get our equity back, and move on to the next project.
Rohan, tell me a little bit about how you actually see the imperatives for the Indian government and how you fit into that in terms of not just road building but other projects, and how much are you in lockstep with what their needs are, and whether or not PPP is the right way to go with regards to this?
Great question. So, the Indian government wants to double its GDP in the next 5 years, and they have sort of taken infrastructure as the main way to do about it because of the multiplicative effect that any infrastructure spend has on it. Now, the Indian government, like I mentioned, envisages this $1.4 trillion of spending in the next 5 years, which is government and private participation. This is the largest infrastructure development push ever in India's history. For us, because now, and this push is spread across all these different areas that I mentioned, whether it's energy, whether it's roads, whether it's railways, transmission, ports, airports, housing. So it's spread across all the different infrastructure segments. And the good thing is, amongst mid-sized companies, we are the only company which is pan-India and across all these segments. So all the other companies are usually a single sector or a couple of sectors focused, while we're the only one in India, barring the large name, that is across India and across all the sectors. So we expect it to be a good sort of supplement for us in terms of all these orders coming in different sectors. And we've also expanded ourselves in all these different areas over the last few years. So we expect to be a big contributor to the government's infrastructure program.
Okay, very quickly here, what's your debt looking like at the moment, your debt levels, and the monetization of assets that you've been talking about here? How much is that at the moment getting you to reduce those debt levels, and how much do your debt levels go down in this fiscal year or fiscal quarter even?
Great question again. So as a company, when we went public, in 2016, debt levels were about, and I'll speak in Indian rupee term, so it was about 2,400 crores INR. And even at the end of last financial year, it was about 2,900 crores INR. So it was almost flat, while the revenues had grown to more than double in the same time frame. We had made investments of about 2,000 crores in new equipment. We had made investments of about 1,200 crores in our PPP and about 1,200 crores in our working capital. But largely, all of it had been funded through internal accruals. Now, in this financial year, obviously, COVID hit, and we had to take additional banking lines, and we had to apply for moratoriums because work had come to a grinding halt. So there has been a slight increase in debt. But directionally, over the last few years, our debt had been coming down while we had been growing ourselves because internal accruals had been so strong.
Right.
Going forward, while this year, like I said, the debt will be slightly elevated, over the next 3 years, we envisage our debt equity to come down to between 0.3 to 0.5 from the current 0.8 plus that it is at.
Rohan?
And a big portion of this will also be happening because of all these asset sales that we've done. We will be getting about 2,000 crores of capital in the next 2 years because of these asset sales, these 7 plus 5 asset sales, 12 asset sales that we've done. So all that money is coming back in the next 2 years.